Another day in the markets, another day the SPY fails to cross above the 20 exponential moving average. What's going on, everyone? In today's video, we're going to go over the overall equities markets, we're going to go over the crypto markets, and we're going to go over the bonds. All right, so without further ado, let's get right into it. So in yesterday's video, I showed the similarities of the chart of the SPY during September 2020, which is the chart on the right, and the current chart, which is September 2021. So what I wanted to show everyone was that back in September of 2020, the SPY had tons of trouble crossing above the 20 exponential moving average, and it also had a very similar huge run up into a bear flag pattern. Okay, so what we see here is very, very similar to the current SPY chart, where we had a huge run up and then we created a bear flag pattern, right? So, and we're also similarly having tons of trouble at the 20 exponential moving average. So, what happens next, according to 2020, is that as we created this bear flag, it ended up breaking to the downside, and we vomited to the downside. So if we look at the current chart for 2021, the Bollinger Bands are moving up rather sharply, and they're getting very, very tight. So that can also hint to a potential vomiting to the downside, very similar to the 2020 vomit in September. So now, essentially, what can we expect on the SPY moving forward? The main thing that we would need to look at, that we also watched yesterday, is that it needs to cross and close above this very key level of resistance at approximately 449. If the SPY can essentially close and close above that level with strength, then start to consolidate above this level, that would be a very good sign of this bear flag being invalidated. The other thing that we need to take into consideration is the Fibonacci levels. And if we start to break above the 618% Fib level and close also above the 786% Fib levels, those would be very, very important levels to also prove that there is clear invalidation of this bear flag. So this would, like, if we start closing above those levels, then automatically the 2020 case is not applicable to 2021. All right, so what we can currently see on the SPY in the technical aspect is that the MACD is starting to move up sharply, right? But the SPY is still failing to cross above key levels of resistance. The number one is the 20 exponential moving average, and number two is this 50% Fibonacci level, and essentially this zone between 448.64 to 449. And the SPY is, once we cross above those two levels, then it will be a good chance to go to the upside. But the fact that the MACD is now starting to move upward with the added weakness at resistance, that's not good. So essentially in the next few days, preferably by Monday or Tuesday, right, as the MACD is starting to increase in this way, right, we want the SPY to start to break above these levels before we have a cross above on the MACD. Because if we have the cross on the MACD, like we've seen multiple times before, if the MACD crosses above with this blue line above the yellow line, but the SPY still fails to cross above resistance, then that is a surefire, that is one of the highest potential short opportunities, meaning that the SPY will very, very likely fall right afterward. Okay, so those are a few things that we have to take into consideration moving forward on the SPY in terms of the MACD, right? The RSI is showing a completely different picture where it's actually falling, whereas the MACD is increasing. So that divergence is also another warning signal. So I would just be very careful and play things very, very safe, because especially tomorrow is quad witching day. And on that day, obviously, this entire week is known for extreme volatility in the markets. So just definitely, if you aren't going to be able to look at the screen and really hone in on your trades tomorrow, just do not take any trades, is what I would recommend. So essentially, that's really it for the SPY. Next, we can go ahead and take a look at the IWM. All right, next, here is a chart of the IWM. So clearly, the IWM is pretty underperforming compared to where the SPY is. We can check that by looking at the Fibonacci levels to see where the IWM is, right? And the IWM is it's not even closed above the 3.82 level, right? So there's still lots more room to the upside potentially for the IWM. You can see that this trend line from back in right here in January, this uptrend line has been clearly acting as support these last few days and is still currently acting as support. So in the short term, the IWM needs to stay above 221 and 220.86, right? But the main levels of resistance are clearly going to be this 382 level, 224.11. And really, I mean, we've been chopping around the same area for months on the IWM. And literally, we cross above 224, your next resistance zone is 228. You cross below 220, your next support zone is 217 or 218, so the numbers have been the same for the past few months, right? But clearly, we are near support. The MACD is extremely oversold, so there is potential room to the upside. You can see here the RSI is actually moving upward, and it moved downward way heavier than the other two indices. So if the indices were to start becoming bullish, then the IWM would have the most potential room to the upside, therefore giving it the most gain if you were to buy this bottom, right? And the fact that the MACD did not move as sharply upward compared to what the SPY moved, right, means that there is still potential room to the upside on the IWM. So definitely take that into consideration. And that should be it for the IWM. We're going to look into the 10-year yield afterward. But for now, let's go ahead and take a look at the NASDAQ. All right, so here you can clearly see that the NASDAQ is showing the most strength out of the three indices, right? So if we made a Fibonacci level of this most recent move, you would see that the NASDAQ is actually crossed and closed above the 50% Fib level at 387. So that is going to be the closest term support level for the NASDAQ. But now it's set its eyes on the 618% level at 379.18. So if we can break and close above this area right here, close above 379.50, that is essentially going to be a very, very high likelihood that this bear flag that is formed here on the NASDAQ is actually going to be invalidated. And then essentially, if we definitely close above the 782% Fib level up here at 380.76, then almost surely, obviously the bear flag just automatically becomes invalidated. So overall, the NASDAQ is showing way more strength than the SPY or the IWM. The MACD is moving up, right? But it's moving up in accordance to the NASDAQ also moving, right? So it's not as bad of a movement as the SPY. You can see that the RSI is moving up as well. So both momentum indicators essentially are showing upward momentum, which is good. There's no deviation. And we're calmly resting and finding support at the 20 exponential moving average, where you saw the IWM and the SPY both having tons of trouble crossing above it, right? So all of those things are very, very good. And it's very important that the NASDAQ is leading, because if the NASDAQ does start to close above, then that would mean the SPY and the IWM would also start to follow. And since the IWM has the most upside potential, the IWM definitely has, tons of potential gains to be made, especially if the NASDAQ starts to move. So yeah, we have to take all of those things into consideration. There is essentially my analysis over the three main indices, but now to get a better understanding of how the NASDAQ and the IWM will move, it's very important to now do an analysis on the 30-year yield, the dollar, and the 10-year yield. So let's get into that. All right, here is a chart of the 30-year yield. All right, and what do I say about the 30-year yield? Is if the 30-year yield and the dollar are both bullish, then that means the NASDAQ is bullish. All right, so currently the 30-year yield doesn't look all that bullish. All right, so it's also having trouble crossing above the 20 exponential moving average. right off the bat, you can see the MACD is extremely overbought, and the RSI is moving upward, but the price of the 30-year yield is going downward. So there is divergence with the MACD extremely overbought. Okay, so those things are definitely warning signals. But of course, if the 30-year yield can maintain above these levels of support, then regardless of what's going on with the technical indicators, price action is king. Okay, so it needs to remain above these important levels of support. Tons of support here, but if this starts to fall, right, if the MACD begins to fall, and as this becomes more bearish, the 30-year yield also begins to fall, um, breaking these levels would most likely be very catastrophic for the NASDAQ. And if the NASDAQ begins to fall very dramatically, then the rest of the market will also fall. So we need to continue monitoring the 30-year yield and how we work off of this overbought condition. So if we can work off of this overbought condition while still remaining in this bull flag sort of formation, right? If we can create a bullish formation in the technical aspect while maintaining a bullish pattern, that would be extremely bullish for the 30-year yield, and then it would potentially be a break of the 20 exponential moving average, similar to what the NASDAQ is already showing in its underlying price, right? So there's the analysis on the 30-year yield. Now let's go ahead and take a look at the 10-year yield. All right, here's the 10-year yield. You can see that we're trading above the 20 exponential moving average. We have created a bull flag sort of formation here, so the technical pattern is also bullish. The MACD is oversold, but is sharply moving upward while still failing to cross above resistance levels. So that's one thing to take into consideration. But the MACD is oversold, and it looks like it has much more room to the upside compared to where the 30-year yields MACD was, where it was extremely overbought, right? So everything looks bullish on the 10-year yield, and things look bearish on the 30-year yield, right? So when the 10-year yield and the dollar are both bullish, that means the IWM is bullish. Okay, so if this yield, the 10-year yield, and the US dollar are both doing very well and bullish, that means that the Russell 2000 is going to be doing well. And inversely, same applies to the 30-year yield and the dollar in conjunction with the NASDAQ. All right, so next we can see that we have the dollar. So the dollar's MACD is very overbought, but we are breaking out of a bull flag formation. So that is a bullish continuation of this move here. The RSI is a bit stagnant here. The MACD looks stagnant as well, but we are moving upward. So overall, we are in a bullish situation for the dollar. So we just need to see if we can cross above a 93.20 and then potentially cross back into these highs back here at 93.7. All right, so there's my analysis on the stock market. Now we're going to take a look at the crypto market. All right, here's a chart of Bitcoin. So clearly you can see that Bitcoin looks very bullish. We closed above this 47,500 level, and I wanted to share a potential trade on Twitter, but I just never got around to posting it. Kind of busy. But this was essentially where I wanted to buy it. We were at this low here on the candle, and I thought that would be a good entry point. And it clearly was, because we are at a point of multiple levels of support today at the lows. So I saw that as a good opportunity to an entry point. And yeah, those are just the things that you have to watch. Regardless of the MACD on the Bitcoin being extremely overbought, Bitcoin does not trade similar to the stock market or the equities market in general. Okay, so Bitcoin can be extremely overbought, but still cross above levels of resistance, basically not seen in the equities market. All right, so right now Bitcoin needs to cross above the 20 exponential moving average. Right now, it could come back and consolidate back down to 46,700 or back down to 47,000, right? Both of those things are completely normal. That's fine, because we did have such a strong bounce. Even a retest to 46,000 or 46,500 is completely warranted. and completely justified, right? So, yeah, overall, those are the levels of support on Bitcoin. But if those things hold, then there's no reason for us not to come back and retest 51, 52, 53,000. All right. So there's my analysis on Bitcoin. Let's take a look at Ethereum. All right, here is Ethereum. So Ethereum is a bit more bearish than Bitcoin. That's fine. If it comes back and retests 3482 or even retests 3400, both of those levels are completely fine and normal. Again, because we had such a fast rally from 3126 all the way up to 3677. So a retest back down to 3400 even would be completely fine, right? So again, Ethereum is definitely going to be keying off of Bitcoin, and currently, unless Ethereum starts to cross above 3600 and then closes above 3677, while Bitcoin still remains in the low pattern that it was, then we can take that as Ethereum is going to start leading. Then DeFi tokens and altcoins are definitely going to start doing really, really well. NFT projects are going to start doing really, really well. But yeah, it'll be very, very interesting to see how Ethereum and Bitcoin are both going to trade in relation to one another. All right. So I hope you guys enjoyed the video. Thank you guys so much for liking, commenting, and subscribing. I will see you guys Sunday. All right. Thank you. Have a great day.